All right, Chris, that was a ton of fun. We had a great conversation about what we would probably both agree is the best loan product available for the people that deserve it the most. What was your biggest takeaway from today's show?
One of the things that I didn't know in researching this is some of the flexibility on the property types that these folks have access to, and really how easily they can access certain things that, even though it's a great loan program, I didn't really know a couple things until I looked it up in preparing for our podcast today. How about you, buddy? What did you what stood out to you?
Chris, you quizzed the heck out of me today, and though it should not be in my wheelhouse and I'm not in any way considered an expert on these, I think I held my ground pretty darn well compared to what probably I thought I would do and probably what you thought I would do.
Yeah, absolutely. I mean, quite honestly, and I say it in the video, don't judge you based on whether you can answer the questions or not, because the vast majority of people, even lenders in our business, don't know the answers to some of those questions. And you did very well. I don't think there were any that you didn't completely not know the answer to. So that was
All right.
impressive, especially because it's not your line of work. So,
All right.
Mark, thanks a lot. And let's get into the video now. Hey, everybody, Chris Bongirno. We are back with SoCo's most interesting podcast. I'm here with the co-host, Mark Ditkof. How you doing, Mark?
Chris, today's been a spectacular day. How about you?
We got a new puppy on Saturday. So, you were asking me before why I was a little low energy earlier before we got pumped for the podcast. Lack of sleep due to puppy. But I am pumped up and I'm excited because we're going to talk about veteran buyers and veteran home loans today. You seemed pretty excited about it in the pre-production meeting that we had.
Yeah, veterans are obviously near and dear to both of us. We work with a lot of veterans. There's a lot of bases in our area, and so we get to see a big influx depending upon the season of veterans coming in, veterans coming out, or active military in and out. And I love that they have their own loan program, and so I'm excited to talk about that.
Yeah, and really, Mark, the reason this was important to me is because I think some folks who have the ability to use a veteran loan, one, don't know how to get started, two, are unsure what that means, and three, like really why do things now, whether they're active duty or recently retired or recently discharged. Should they wait? Does the program get better over time? So we're really going to just scratch the surface today of some main topics. And then what we're also going to talk about is a lot of what we're going to cover today, lenders may or may not offer. And one of those things that I'm going to talk about is credit score. And so when we get to that, that's going to be probably our first big example of what fluctuates between one lender and another. And we'll give some examples with that. And as always, I want you to jump in and ask questions if I'm covering something and I'm not being clear. And then I've got some questions for you along the way as well.
I'm excited. Let's do it.
Okay, so the first thing I want to talk about, Mark, is we said, veterans get to use veteran loans, but how do you know if you're eligible, right? Because if someone's active duty, are they a veteran? Are they eligible for the veteran program? What's the answer to that, Mark?
So my understanding is they have to be, it's like 6 months, right? Active military or more, and then they can use the VA program. Is that right?
So there's a couple different things, and it differentiates between if they're in the National Guard versus the Army versus active duty. And so rather than get into the nitty gritties on that, here's what we're going to do is if you are active duty, you are likely eligible for a VA loan. And what I'm going to do is tell everybody, if you have any questions on that, your active duty, you can go to the website and pull up your certificate of eligibility. So that's where I'd start first for our active duty veterans. It works great for discharged and retired veterans as well. The farther your discharge date or your retirement date, you could run into a circumstance where it's not available online. I did a loan for a veteran probably about 15 years ago, and he was actually a World War II veteran. and we could not pull his certificate up on the internet. So in that particular case, we needed to get his DD-214, which are his discharge papers. We had to order that manually direct from the VA. So what I'm going to say, for active duty, you are likely eligible. And you're right, there are some parameters that go along with that. If you have any problems getting your certificate of eligibility, a local lender in particular, should be able to help you get that. Loan amounts. Mark, what's the maximum loan amount for a VA loan?
Then you're just putting me on the spot here. I don't think there's no maximum loan amount, right? There's not, like, because I know conventional and like FHA in our area, based on your area, they put these like set maximum limits to it. And I don't think there is necessarily that limit for a VA loan. Is that right?
You're wrong. Now, you're partially right. Okay? You're partially right. So when you're eligible for a VA loan, if you're discharged, you have to be other than dishonorably discharged. Okay?
Right.
But what also makes you eligible is whether you have guarantee available. So the VA loan program does not have traditional mortgage insurance like you would have on a conventional loan or you'd have on an FHA loan. VA guarantees the loan for lenders when we make these loans with zero down. And so what happens is VA assigns a number of eligibility for that particular veteran. Okay, we're going to get a little in the weeds here, so follow me on this. So what happens is if you get a VA loan right now to buy your home, you may use all or a portion of your eligibility to buy that home now, today. Okay, so we have that home today. 2 years from now, you use the remainder of your eligibility for a new home loan. And when you go to do that, you're not going to sell your existing house and you're not going to refi. So you're going to really have two VA loans at the same time. So when you go to buy your new home, you're going to use partial eligibility. If you use partial eligibility, there's a loan limit. Okay?
Okay, so on the first one, though, there wasn't necessarily a loan limit?
No, if it's your first time use and you've never had a foreclosure or a short sale with a VA loan, no limit. So
Okay,
really,
you could
you could really buy a $5 million home. The other thing is that there are limits on loan amounts if you buy a 2, 3, or 4 unit property using your VA loan. So even though technically there's not a loan limit, you're going to be limited in your county by the Fannie or Freddie conventional loan limit for a 1 unit, even though you're going to buy a 4 unit if you're using your VA loan. So you're partially right. And again, I don't want to get too much in the weeds. This is why you need to talk to a local lender and figure out what it is for you in your particular situation, especially if you've had a VA loan before or you've had a foreclosure or short sale using your VA loan. You can still buy a home using your VA eligibility, but there's some trickiness in there that you want to talk with somebody where you're experienced. But I'm actually familiar with someone that used their VA loan to buy a $2.5 million home in Denver. I didn't do the loan, but I was familiar with the transaction. And then we talked about they can buy a 1 to a 4 unit. One thing that I want to throw out there that I just thought of, 2 things that I thought of on VA loans. One, you can combine a VA loan with down payment assistance programs. So you can use a VA loan with CHFA, Colorado Housing and Finance Authority. And you might be saying, well, Chris, why would my buyers do that? Do you have an idea, Mark, of why somebody would use a VA loan with down payment assistance?
Yeah, so I would think, so they don't need the down payment assistance necessarily because they have a 0% down loan using VA. So my only other thought would be is that either one, they could get some assistance to pay some of their closing costs because that's how CHFA works, right? You get a little bit more than the down payment. And the second thing is they'll get an interest rate potentially that would be better than maybe what the VA is offering at that time. Though VA loans, I think a lot of the times have kind of a lower interest rate, but maybe there was an instance where the VA rate was higher than like what the CHAFA rate would be, and so they'd be able to lock in that. And you're nodding, so does that mean I'm right?
Yes, you're doing good. And by the way, everybody, if Mark doesn't know the answers to these questions, that is in no way reflective of him being an uninformed realtor, because I don't expect him to know the answers to these questions. And so far, I've been pretty impressed, Mark. So
Oh,
good
well, thank
job.
you.
I expect you to not know the answers so I can look like the subject matter expert.
All right.
But there's a couple reasons why, and you're hitting on the points. So one of the reasons to use VA with CHAFA would be, let's say someone has a really low loan amount and a lower FICO score. So they might end up with that higher interest rate, because with our CHAFA program, it's not tied to FICO score or loan amounts. The interest rate is the same for everybody on that particular loan program. And you're right. Number two, you could use those funds to help with down payment. And there's two reasons why that's important. One, you don't have to ask the seller for those concessions, right? So it could make your offer more competitive. So maybe it's not as important today, but it's probably going to be important this summer. So again, that might work. The other thing, and this is very unique for VA, and I want everybody to pay attention to this part. With VA loans, the seller can pay off credit for the buyer to help them qualify for the loan. Okay, so VA allows the seller to pay off credit to help the veteran qualify for a loan. You don't have that option on any other loan program that we do on residential lending. And the reason that's important, Mark, because if you're doing a loan, so I'll give you a real life example. I had a customer owed about $6,000 on a car loan, and his monthly payment on that was, if I remember correctly, about $285 a month, and he did not qualify for the home he wanted, veteran, so on and so forth. So what we did is, and there was only so much room for the seller to pay for closing costs. So what we did is we partnered that up with CHAFA. He took care of his own buyer took care of his own closing costs, which was much less than the $6,000 to pay off that car loan. And the seller paid off his $6,000 car loan at closing, and he got the home he wanted. So it's really a strong benefit for a VA buyer. And a lot of people don't realize that they can use that to buy a nicer home or just the home that they want. One other thing, we briefly touched on the funding fee, or I'm sorry, the guarantee fee. So what happens is it's funding fee or a guarantee fee. Guarantee is USDA. This is a funding fee. Let me back up. For VA, it's a funding fee. And you pay that in that it is typically added to your loan amount. It is a upfront fee that's typically paid for by the veteran through their monthly payment. And there's differing percentages of that based on whether they're reusing their VA home loan benefit or not. We're not going to get into the weeds on that. What I wanted to point out here is that if you have a service-related disability, if the veteran has a service-related disability, in many, many, many cases, that funding fee is waived. The VA determines if it's waived or not, and that shows up on that certificate of eligibility that you can get from the VA website. Sneeze inbound. Cover
So
me.
while you're doing that, then, so I just wanted to kind of let me break that down real quick. Then, so they're gonna buy a $300,000 house, but there's gonna be this funding fee attached on top of it. And I'm just gonna throw out, I don't know what that costs. Let's say it's $10,000, right? So now their loan could really be $310,000, and they're gonna pay that through, even though the house was only 300. Is that kind of how it gets? Then basically they're paying their monthly payment based on the 310.
Exactly. But the $10,000 is wrong, as you suspected it would be. Talk to your local lender to find out what that is. What I really wanted to point out, if you have a service-related disability, that likely is going to go away. So
Awesome.
Talk with your local lender. They can interpret that certificate of eligibility and let you know whether that's there or not. Okay, Mark, time for another test question.
All right, let's do it.
Okay. Veteran is going to buy a house, and they would like for their primary residence, and they would like their daughter to be a co-signer on the loan and have joint ownership of the house. They can use their VA loan to do that.
Is that a question?
That's a question. Can
Okay,
they
so
do
can
that?
so the veteran themselves is going to be the one that's owner occupying the property, but they want their daughter to be a co-signer and part owner. Is she going to be occupying?
Yeah, let's say she's going to be living there.
Ooh, I'm going to say sure. I think that's yes because it's a vertical relationship. I think that if you go outside of that, maybe not necessarily the case, but I think if it's a vertical relationship, it's going to be a yes.
So the answer is yes, with a caveat.
Okay.
There will be a down payment required.
Ooh, how much?
Talk to your local lender.
Okay, so it just
So
depends
what
on
I,
what the servicer is
so
going to
so
do.
what I'm going to tell you is that there is so a veteran's eligibility covers that guarantee where VA is going to guarantee a portion of the loan in case of foreclosure. So what happens is when you add someone who is not a veteran spouse or a spouse. So
Right.
your spouse can be a veteran or a non-veteran. When that happens, a down payment is required because there's a change to that eligibility calculation. So yes, they can be, but with a down payment.
So what typically could somebody see as that required down payment? I mean, are we talking 3%? Are
15%.
we 15%?
15,
Okay.
yeah.
And I
Yep.
assume that's because it was a daughter in that example. It was a vertical relationship. That's the reason. But they can have their buddy who has no relationship, not a spouse, anything like that. They couldn't be on the loan.
They
Or
could
would
if
they
they're
still?
living there and it would be
Okay. So it
the
doesn't have
same
to be a
kind of
relationship.
no.
Interesting.
No,
Okay.
because they're
That's
going to
good to
be
know.
living there. Because
Yeah.
they're going to be living there. Okay, let's talk about credit scores really quick. Mark, what's a minimum credit score for a VA loan?
There isn't one. I do know that. It's going to
That's
go
correct.
servicer by servicer. Each company has the right to kind of set their own standard if they want, but
Not
the
so much
federal
servicer.
guidelines.
It's not going to be
Mhm.
servicer. It's going to be lender.
That's what I
So,
meant. Yeah, lender
so a
by lender.
servicer
Yeah,
doesn't have to be a lender, although in a
true.
lot of cases that's the case. But yes, you're right. So lenders. So for example, Loan Depot on a purchase, single family unit, single family residence, stick built home. It has we have a minimum credit score currently as recording this, all the disclosures in there of 520. But there are lenders who do not have a minimum credit score because they follow what is available out there for VA. There's other lenders that have 580 credit score requirements or 600 or 620, and some are even higher.
I
Okay.
actually know of an example, a lender that I've worked with in the past that they closed a VA loan, and it was certain situations, everything, all the other stars had to align, but his credit score was a 490, is what I believe
Mm-hmm.
she had told me. And so I said, that's amazing. I mean, again, there's always questions as to whether or not somebody with a credit score like that, depending on how their credit score got to that point, are they in the right
Exactly.
situation and responsible enough to own a home? But I know there are certain aspects that can really drop a credit score. That doesn't mean you're irresponsible, and so that's I think a lot of the parts of what they look at.
Absolutely. And again, it helps with compensating factors like, do you have a down payment? Do you have money in the bank after closing? And there's something else that we're going to talk about here in just a couple minutes called residual income. And how does your residual income look? So those are all compensating factors. And that's the point I wanted to bring up. Just because you've got a 520 score doesn't mean Loan Depot is going to do your loan. You've still got to qualify for the loan. That's one component that makes you, and this is the key word, eligible for the loan. Right. So if in your particular case with this other lender, and they had a 490 credit score, they're not eligible for a VA loan through Loan Depot at that particular time because we have a 520, but they were eligible through this other lender. And then on top of that, they were able to get approved. And you're right. You led into a second point I was going to bring up, and you said it very well, is that it's not just that minimum credit score, right? It's also the credit history. What brought you to that credit score is really important. And so I've had clients that have had a 650 FICO score, and I can't get their loan approved through the computer even though that's way above our minimum requirement of 520, the computer didn't like something in their overall credit profile. So just because you hit that minimum score doesn't mean you're absolutely going to get an approval. In that particular deal, we were able to do a manual underwrite, but I couldn't get the computer to approve that loan request. The next thing we're going to talk about is something that's a little unique to VA loans, and that's called residual income. Mark, I know you're familiar, and probably a lot of our viewers are familiar with the term debt ratio. How do you interpret debt ratio? What does that mean to you?
So the way I understand debt ratio really comes into play is how much money do you have coming in compared to how much money is automatically coming out at a minimum each month. And so what goes into that debt typically includes if you have any mortgages, minimum payments on credit cards, minimum payments on car loans, minimum payments on student loans, potentially, like those kind of things go into debt ratio. Right. Not utilities, not groceries, not gas for your car, any of that kind of stuff.
Right.
Though.
Exactly. And what income do we use? Do we use gross or net when we do that?
Ooh.
Do you know?
I'm gonna go with gross income.
Right, exactly. Debt ratios are based off of gross income. So what it doesn't account for, it doesn't account for taxes, right? Income taxes that you're going to have to pay, or your FICA taxes. And you're right, it doesn't include utilities and maintenance for your house. So what residual income does, residual income is a separate calculation from debt ratio. Okay. And what that does is it's going to take your gross income and we're going to subtract from that, not divide like we would in a debt ratio. We're going to subtract. So we're going to take your gross income and we're going to subtract your state, federal, FICA, and Social Security taxes out of your gross. And then we use a calculation based on the square footage of your new home, how much to account for maintenance and utilities. So we're going to subtract that out as well. Okay. So everybody who's earning income that we're going to use or is on the loan, we're going to use their income. We're going to subtract that out from everybody. And we're going to compare that number to a grid that we have from VA based on the number of members in your family. And you're going to be above or below that number. If you're below, it's a really big issue because you could be looking really good on debt ratio and be under residual income, and we may not be able to do your loan. But you may be significantly over on debt ratios, but your residual income is just amazing. And we can do that loan all day long. So the reason I want to point that out, one of the really cool things about VA loans, they have a fairly low foreclosure rate. They're some of the best performing loans in the business. And a lot of experts that I've read and talked to have said that's because of this additional residual income calculation. So what I don't want people to get, the reason I'm bringing this up, again, I don't want anybody to be an expert on residual income, but if you're just getting online and you're reading things about debt ratios and you're like, well, we can never buy a house that we want because our debt ratios don't match up. If you're a veteran, you still may be able to qualify that home because of the residual income. So again, good to talk to a lender if you're a veteran and get those answers. Even if you're not ready to buy, at least you'll know where you're at.
That's really interesting too, because like how you said, they have such a low foreclosure rate. And that's because when they push these loans through, it shows this person has the money available after all these other things to pay their mortgage. And that's not something that the other loans look at. And I think that's a really neat thing to point out.
And that's why they're willing to, make a loan for somebody with a lower FICO score, because they know, like you said, that something may have happened that generically looks like they're a credit risk, but the residual income calculation not only shows that their debt ratios are in line, but after their taxes, after maintenance and utilities, they're still in really good financial shape. So it's just that extra step that VA takes to really ensure that these folks are going to be qualified. And so it helps get deals done that, quite frankly, a 490, we'd never get done on a conventional deal. One, it's not eligible, but two, the credit standards are different. Let's talk about property condition. And I coached you a little bit before we got on, Mark, because I wanted you to be able to give some thought as to this question. So I know as a lender, because I've had a lot of conversation with agents, when they're going to list a house FHA, what they're thinking about to discuss with a seller about getting the home ready to be able to accept FHA financing. VA does have minimum property standards. So do you do anything different when considering a VA loan when you're talking to a seller based on property condition?
You know what? So we really go off the guidelines that I've seen, a lot of VA loan and VA appraisers are going to point out based on the three S's is what they call it, right? So you've got structure, sanitation, and then safety. And so we look at the basic structure of the house. Same thing with FHA, right? Is there chipped and peeling paint? Are there areas of the house that look like they're falling over or having serious structural concerns? The sanitation comes into play. All the plumbing fixtures that are currently in the home should work properly. Right. I actually had one that got flagged one time because a shower was missing the actual like shower head to it. Like the pipe was
Yeah.
coming out, but there was no head on it. And so
Right.
they made us install a head, right? Which is, you could say, well, that's kind of a pain in the butt. But at the end of the day, it was a $15 thing. We screwed it on. The buyer got the house, right? The toilets, we had one of them one time that it just kept running, right? The flapper just needed to be replaced. Silly things like that aren't expensive, but it's ensuring that the home is doing what it's supposed to be doing
Right.
as it stands, right? And then safety, a lot of the times that comes into play in regards to do all the windows open, close, and latch as intended? Do the doors work, right? If there's a door that doesn't open, but that's supposed to be your way out of the house in case of a fire, that's a problem, right? And other thing, electrical a lot of times falls into the safety thing, right? Are there wires sticking out that somebody's going to electrocute themselves on? And so we do look through the house in those standards. The funny thing is, though, most houses, if somebody's already living in it, it's going to be pretty darn close to being acceptable for a VA loan because most people wouldn't live in a home that wouldn't pass that standard anyway.
Right.
I mean,
Right.
that's really what it comes down to. And if it is, it's little things that are very fixable.
One of the things that I run into, Mark, is people are confused because they think the VA guarantees that home because it's a VA appraiser, somebody on their panel that goes and looks at the home for the appraisal, or they think that it's a home inspection because it's a VA paneled appraiser that goes out and looks at. Do you ever run into that where people mention things like that, or you don't have those kind of discussions with folks?
A lot of uneducated buyers don't know the difference between an appraisal and an inspection. And so we'll run into that when they're not quite sure which one is which, especially if they're an FHA or a VA buyer where they think, well, the bank is going to send in somebody, they're going to point out the issues. I said, well, they'll point out some issues if it's something that the bank finds as an issue, but that doesn't mean they're going to point out the age of the furnace and the age of the water heater and whether there's a leak under the sink, right? They don't always catch all of those things like a home inspector is going to. So yeah, we do run into that at times.
Okay. We're going to have our last test question. It's kind of the last thing that I wanted to talk about today. So we've got an active duty service member, and they're currently stationed in let's pick South Korea because we have a lot of folks over there, and they want to buy a house here in Pueblo, and their spouse and two children are going to live in that home, but they are stationed in South Korea. Can they do that? Can they buy that home here in Pueblo?
Absolutely, they can.
Okay, now before we go any further, what if they're stationed in Wyoming?
Ooh. And I would think they probably still can as long as they don't own, as long as their eligibility allows for it.
As long as their eligibility and the family members are going to be moving into it within 60 days of closing.
Yeah.
But
they don't have to move into it because they might be stationed elsewhere. But yeah, I don't see any reason why, because it would be very similar to any other loan.
Right.
Somebody could use a conventional or an FHA loan to do really the same thing,
right,
as long as they intend on living in it and that their family is going to be moving into it. It's not the person in particular's fault that they are actively stationed or deployed somewhere else.
There's two reasons why I wanted to bring that question up. One is I had a customer and they were actually stationed in Georgia, and his wife and child were moving to Pueblo. And that is because at some point in the next year or so, he was going to be deployed overseas, and they wanted her near both their families. They were both originally, he, I believe, was from Springs and she was from Pueblo, and they wanted to be here, and they didn't think they could use their VA benefit because he was going to be in Georgia. So we were able to use it, no problems, all went great. The second example of that is I did have someone that was, I believe, stationed in Germany, and they wanted a home here in Colorado. It wasn't in Pueblo at the time. And similar situation, had a spouse. She was also active duty, but she was recently active duty and did not have eligibility and had not served enough to have eligibility. And so they were confused whether they could buy the home here using his VA benefit because he was not going to be in state and she was, but didn't have eligibility. So don't let that active duty situation hold you back from looking at purchasing a home. And there's some other things we have to do for active duty people, but it's just extra steps. If you're working with a local lender or even not a local lender who's familiar with VA lending, they're not very complicated or hard things to deal with. Mark, what I leave out or something that you've always had a question on or something more you want? And if the answer is no, there isn't anything, that's good too.
No, so actually I have two things I always like to point out when it comes to VA loans. One is that like FHA loans, they are assumable, meaning that if you have a home in a VA loan and you're going to be selling that home, there's a potential opportunity for the buyer to come in and take over that loan, right? And that's beneficial when you have a lower interest rate than current market rates, or that's really one of the biggest values to it. Now, at the end of the day, though, if that buyer coming in is a veteran, it ties up that new buyer's eligibility. If they're not a veteran, though, Chris, my understanding is that it'll still tie up my eligibility as the seller. And so if I go to buy another home, like you said, that's basically looking at my second home. It could limit my loan limit on that VA loan. Is that accurate?
That is accurate. Plus, if that buyer defaults and there's a foreclosure, it goes against your eligibility as the seller.
Ooh, okay.
So,
and see, that's a big deal. Even though I'm not responsible for the loan anymore.
It's a double whammy.
Wow. Okay. Not as enticing. But if they are a veteran assuming it, it's all on them at that point.
Absolutely.
Okay. Second thing I like to point out, and I've run into this, so I want you to confirm this for me. If my spouse is active duty or a veteran, and I am not, but my spouse passes away, am I eligible am I allowed to use their eligibility to purchase a home?
In most cases, you're going to be able to use surviving spouse benefits. It's different if the surviving spouse is also a veteran with eligibility. If that's the case, you're going to use the surviving spouse eligibility. But in most cases, you're going to be able to use it as a surviving spouse. Again, you're going to run into the same things. Did you have a previous foreclosure or short sale? Is there full eligibility left? Do you have any other VA loans? And a lot of people, and just clarify something, Mark, because and maybe I wasn't clear about it before either, and I want to make sure I'm really clear. You can have more than one VA loan at a time.
Yeah.
You just have to have enough eligibility to cover those multiple loans.
Yeah. Yeah. But I think it's interesting because, again, we've run into it where we had somebody who their spouse passed away and they were in the military. And so they just assumed I can't use the VA loan because they passed away. And we said, actually, I think we need to talk to a lender that knows what they're doing because you might be able to. And they did. They got qualified to use a VA loan. And so it's just something
the VA has gotten a lot better at communicating benefits to surviving spouses. So I haven't run into it as much, let's say in the last 10 years than I did in the previous 10 years of my career. I used to run into it an awful lot. But the VA has done an excellent job, especially through their website, of getting that information out. So I think we see that less often than we used to.
Good.
Mark, I love talking about loans, you know that, and I appreciate you giving me time today to kind of be the focus of our show. I think it's really important for our veterans to take advantage of every benefit you guys have. I know veterans hear this. Thank you for your service. But when I say that, I mean that from the bottom of my heart, because I know you do as well, Mark. I won't speak for you, but veterans deserve so much more than what we give them, even more than these VA loans and the benefit. I wouldn't be here. My family wouldn't be here without the sacrifices that our service members make for all of us. And it is truly an honor and a privilege to help our veteran families purchase homes.
Chris, I couldn't agree more. And so that's why we always encourage our veterans, reach out if there's ways we can help you guys, especially in regards to getting to home ownership. That's absolutely something that we're passionate about doing. And I do love that the VA loan program exists because it is, I think, objectively probably the best loan program available for anybody. And if anybody did deserve it, it would absolutely be them.
Yeah.
So, Chris, I'm just going to encourage everybody, please like and subscribe to our channel. Let us know what topics you want us to cover. We love talking about things, all things real estate in Southern Colorado. It's some of our biggest passions. Chris, if somebody wanted to find you in particular to reach out, how would they get a hold of you?
You know, the easiest way, Mark, is look in the comments below if you're on YouTube, or cbongirno at loandepot.com. Mark, where do the people find you? I know the answer to this. It's
Yeah, so
you're
I do.
hashtag Onyx Home Group on all the major social media sites, and that's ONYX.
That's Onyx with a Y, and it's gonna be at Onyx Home Group. You sure got it. Any major social media channel, we're gonna be there, and we're gonna be responding to all your questions. So, Chris, it's been a pleasure today. Thank you so much for this topic.
Thanks, Mark. I really appreciate the time.